know. Let's check how it sounds here. Let's check how it sounds here. That, yeah, I'm not sure. Let's see. Okay, can y'all hear me? Can y'all hear me still though? Let me see. It sounds okay. We're just gonna go for it, man. Whatever. All right, y'all. So this week in the DXY, we had a couple things happen. And I'm gonna kind of try to break them down for y'all a little bit. As you see, I'm gonna just take all this stuff off the screen. But we had a couple things that happened for us. US dollar. We were kind of talking about how we thought maybe it was going to attack the downside, right? We thought maybe it was going to attack the downside, but we weren't sure because there were a couple of things order blocks wise and things like that that ICT talks about that were in the way, right? So what I'm going to talk through is what actually happened and what I was able to take advantage of. Now, within this market, right, we were looking at to see that we already had a couple touches to this breaker zone up here, right? So we were thinking, we don't want to see too many more, right? We're thinking another approach back to this breaker zone, for me at least, would mean, you know what I'm saying? I think it's going bullish. So that's what I was going into the week thinking. And then as we got to it, that's exactly kind of what happened until we touched that breaker, and then you saw that big dip here, right? So I was like, wow, okay, it's very interesting how we had another whole approach, right, back to the zone, but it literally touched the breaker and came back down. So it was very interesting. So we're gonna just take it from the weekly and look at what we were looking at before, right? We were looking at this weekly order block, right? Price came down, touched the bottom of what we have as the wick for this order block. Really could use the entire body. You could say that it just touched the top of the body, which would make it even stronger bullish, right? But then we saw that price came down last week, touched it, and then, you know, basically closed above the midpoint of the order block. Now we saw price in the beginning of this week come down, approach the midpoint, not even touch it for real, and then all of a sudden go all the way back up. So at this point, I'm thinking, you know, throughout the week, if we break it down like the daily chart, right? At this point, you know, within these days, especially this day here, I saw it come all the way down here again, touch the midpoint, and then go up. So I'm thinking, we're going to be bullish for the next couple weeks. And then you get this large, like, bearish engulfing candle, and it's just like, okay. So I'm going to show y'all what that shaped up to look like on the other time frames, because this was basically what yesterday, Friday, all of this for NFP week, right? But in terms of the other currencies, let's take this off our screen. That shaped up to look like this for GU, and I was able to take a nice little trade. Now we got a lot of lines and stuff, so we're gonna just go down to nothing here and just show y'all same thing, right? We had price coming back up. Price had already touched what is this higher time frame weekly fair value gap, right? Now I'm gonna have to like make it a little bit easier for y'all to see. Let's just go down to let's go down to the, what is this, the weekly? Yeah, let's just go down to like the 4 hours so I can just zoom into what was going on. So essentially, right, this week was this price movement here, this price swing. I'm trying to see what I can do to make it a little bit easier for y'all to see. I'm just gonna take this off my screen for now. I'm gonna take this off my screen for now. Actually, no, we're gonna leave that. So, and this is something from earlier. So I'm gonna chart this up live instead of pre-doing it, so that way it's not so hard to see. So basically, as we were coming from last week, I had this high, low, higher high as a potential breaker for the downside, which it ended up becoming. But I had changed it to an order block because it isn't also an order block technically if you're looking left and you're looking at price potentially coming up and bouncing up out of this position. So it ended up acting as a proper breaker, right? Which is interesting because that goes to show you that you should just keep your normal, whatever your original synopsis is, go with that until it's proven wrong. I'm learning how to do that. So technically it was a breaker, right? We can change it back and just look at it from that point of view. But I was looking at it from the point of view of order block. So we'll just leave this and I'm gonna explain why looking at it either way is helpful, right? If I'm looking at this as an order block and I see that price is traded through it, now my order block is invalidated, correct? So if my order block is now invalidated, what I'm looking for now is price to trade similar to a breaker, right? I want price to trade basically underneath it, right? And then respect it and continue down, which would show me that the order block, the bullish order block, is not valid, but we have bearish setup. So it acts the same way as if I was looking at a breaker, right? A bearish breaker, except bearish breaker would mean that I was expecting that the whole time. Bullish order block would mean, oh, I was hoping it was going to go up, it didn't, ran it out, and then respected it like a breaker. So either way you had it, you just have to pay attention to the price action around it and you'll be able to determine what you should do with the trade. Now with that said, I believe it was on, let's break it down to the hour chart and see what price action looked like. So if I go back and put my fib, I had a fib here earlier that I wanted to explain to y'all. Let's go back and put it on there because this entire week I basically used ICT's Fibonacci premium discount idea, right? So here we go. I have the fib and I had it from this high to this low. Essentially there is a structure here. This would be called a mitigation block. If we zoom in on the 1 hour, we can kind of go over a little bit in depth and show you why I chose that option. We can also go over the same thought process for, like, you see these little Asian ranges that I have here. I'll give you the other way you could have looked at the trades as well, right? Which is why I like ICT's concept so much, because he just gives you so many ways to determine what you want to do with the market, right? So we had already had the higher time frame touch on the weekly fair value gap. This is the consequential encroachment of that, but this is the weekly fair value gap right here, right? We had a slight market structure break here because we had a little bit of a mitigation block, you could say here, high, low, lower, high. This would have been a mitigation block. Price ran it out, came back up in, right? I said, okay, let's see where this range is on. From this high to this low, we've got another little bit of a range, right? And this day was, I believe it was Tuesday. Oh yeah, there you go, Tuesday. So I had basically drawn out the fib from this high to this low, which would give you this zone of retracement, right? So if I move the fib out a little bit, you can see the actual zones here. Maybe I can put the zones on the other side so they're a little bit more clear to see. Let's put them to the center. Yeah. So you got these Fibonacci zones, right? You got the high basically drawn out to what was this, this low here, right? So price is retracing on Tuesday, and I'm watching to see, okay, is price going to go further than these levels? Ideally, you would want it not to go further than the 51% or the 62%, right? But sometimes it may go to the 70, 79, or even close to the 1. But if it gets anywhere in this zone, I'm usually out of the trade. I don't want to even think about it as that, right? But as you look at it, it basically came up. There's an order block to the left, right? If we look on the higher time frame, that order block might be a little bit bigger, which we can look at that as well. But just looking at the fib alone, it comes up, touches the 62%, and then runs off, right? So if I show you my trade entries, I can show you exactly where I got in. I got in on that large candle, trade executions, right here, boom. proof that I got in and got out right here after this level of liquidity. So that is kind of an easy setup, right? You've got a range, right? Price dips back into that range at a certain percentage and then kind of takes off and attacks the next level of liquidity. Now, what happens next is if we leave that fib up, we can also look at now a fair value gap has been created on the hour chart. Price basically trades back up into that fair value gap, doesn't penetrate past it, and then we have more setups to the downside, right? Now, you would say, well, what about this? Yeah, if you would have took a trade here, they would have took your stops, right? But as you see it close down here, you would have been able to know, okay, I could probably get back into that trade, which is why you take a huge lot size, right? For your first trade of the day. You take a smaller lot size, test it out, see what's going on. And once price really shows you its direction, right? And I usually say after the news for me, then I'm really gonna get into trades and I'm really gonna wanna, figure out what I'm trying to do for the day, right? So um that is the trade that I took for the week. Since it was NFP week, I was like, nah, I'm not taking any more trades than that, right? Like, I don't want to overdo it. But what ended up happening is there were a lot of good price moves. Even as we moved down, another fair value gap, price moves back up into that fair value gap and provides us with another nice price move, right? So NFP week is not always evil, right? There's some good moves sometimes on NFP week that are pretty clear. Like these are pretty clear, right? The fair value gaps kind of tell it all. But I took a more calm approach and just said, hey, I'm gonna get my couple pips. I got me 40 something pips on this trade alone, and I was fine, right? Because even for me, like, one thing that I like to do is try to get at least 25 pips per week if I want to trade. And that if I get 25 pips every week, 4 weeks in a row, then that gives me 100 pips for the end of the month, right? So right now I'm halfway to my pip goal. To me, it's about conserving, managing that account. Because I've tried to do more. I've tried to overdo it before, and it didn't work out how I wanted it to. You feel me? So it is what it is. But so that's where we're at for the week, and that's what happened. Based off of what was going on in the DXY, right? We saw that large run basically during the entire week, all the way up towards the breaker, touched the breaker, and then on Friday you saw it trade back. So all this was what we were taking advantage of with the ICT concept, the fib, what am I trying to call it? Discount and premium, right? So now the other ways you could have looked at this discount and premium type of trade, right, is you could look at was what I would call the Asian range sniper, but it's just essentially ICT's Asian range model, right? So I've got my Asian ranges here in red. Let's just go through these 4, right? I've got my Asian ranges here in red. We'll take the fib. Well, we can leave the fib, right? But so essentially, when you know the direction of where price wants to go, right? I just showed you in the DXY that it was mostly bullish for this past week. And then on Friday, NFP week, sent it down, right? So during that mostly bullish time frame, you're understanding that price is either going to go back and touch that breaker that we're looking at for the DXY, or it's going to go up in some capacity, right, for a couple of days. And as we're doing that, we know that foreign currency is going down. So all we have to do, right, is focus on what do we want to see. We want to see with the Asian range, we're looking at the 12 o'clock open, which I have tabulated here. Let's just zoom into just one so y'all can see exactly what I'm talking about. So boom, I got my highlighted range here, right? And then I got the rest of the Asian range finishing here. This range, I have it purposely ending at 12 o'clock so that I can know, what's going on. Now let's go ahead and just do this so I'm not distracted. I have it purposely finished at 12 o'clock. So ICT talks about when you're bearish and price goes above the 12 o'clock open, which would be here, 12 a.m. open, that you can trade above the 12 o'clock open, which I ended up doing by happenstance. I wasn't thinking about it in this way because I was looking at the fib setup, but that's 2 confirmations. Excuse me. If I was paying attention, I would have had the Asian range snipe confirmation, and I would have also had the ICT premium confirmation, right, with the fib. So not only that, but if we're looking at a higher time frame, let's look at the 2 hour. We're looking at a higher time frame. We can see that was there order block over there? Uh, Probably looking at the order block over here. Yeah. So, okay, here we go. This is what I was trying to look at. So if we're looking at the higher time frame, not only did we have that, Fibonacci setup, not only did we have the Asian range setup that was above the 12 a.m. open, but we're bearish, right? But um, we also had this fair value gap on the 4 hour that was open as well. That price did not trade past. It basically stays right up and kisses the 4 hour um, fair value gap. So there's another confirmation for you, right? Boom. It doesn't even touch it. It's another confirmation for you that, hey, I could have got into this trade. Not only it's 9 a.m., it's after the news, which was, I believe it was at 8:30, and it's within the ICT kill zone. So there's three confirmations, right? There's multiple ways you can look at it, but it's easier to use ICT's concepts, and he says it himself, when price has decided its direction, when it's clearly one-sided and it wants to target something, right? So going back down to that hour time frame, we knew that it wanted to target, at least on that day, I knew that it wanted to target these relative equal lows. But then as you go on the rest of the week, you kind of looking like, okay, where else is it really looking to target? These are relative equal lows. These are relative equal lows, which it ended up getting here, right? Pulled back up into that fair value gap. Then where did it go? These relative equal lows here, right? So as you're looking at that, you're looking at the DXY, right? And you're saying, okay, where's the DXY trying to target? Like on Tuesday at 9 a.m., we're here, right? We had just ran out some of these stops. We're targeting these relative equal highs, right? On Wednesday, right? We had I didn't take a trade Wednesday. It ran out these stops and then ran back up to try to get this level of liquidity, right? Boom. Then Thursday, it doesn't even into Thursday, it doesn't even pull in halfway into this fair value gap, goes and attacks these relative equal highs way above here. Then what does it do on Friday? It takes out these relative equal lows, these relative equal lows, these relative equal lows, almost taking out these, takes out these two. Right, so that's a way for you to kind of look. And then when I talked, on a higher time frame basis earlier in the week about the fact that we were thinking that price may, if it's approaching, for the fourth touch on this breaker, we're going to be thinking bullish, and then we got to see what happens at the breaker. Those are ways you can kind of control your appetite for trades and make sure that you're on the right side, right? So that was what I was looking at in GBP this past week. And now, since we've had that, higher time frame touch on, let's go ahead and get rid of this fib so it's not in the way, and we can get rid of this too. But yeah, that was my setup basically. I didn't even notice it. But now, since we've already had, if we look on the higher time frame, what I was just about to tabulate was, I think it was the 4-hour order block down here. So let's look at that. Is it 4 hour? No, this might be weekly or daily. Let's see. There you go, daily order block. So what I had tabulated here was a daily order block, which is consequential encroachment. So if we're they're looking at this down close candle with this wick. Now we could, since this wick is so long, we could really just use the wick length, which is what I'm going to do. It's an extremely long candle, so I'm going to go ahead and just use the wick length. No, I want to keep that. We can get rid of our executions since we showed those already. And now we're just looking at, for the next week, where has price closed, right? You're looking at this on the daily chart, right? Before I said I was short-term bearish DXY, bullish GU. Right now, I have to see, because looking at GU, we have come down and basically we have not crossed the midpoint. Consequential encroachment is such a long word. The midpoint of this order block range, right? And we'll just go ahead and put it on the chart. Yeah, something like that. And the fact that we haven't crossed the midpoint, to me, suggests what? Suggests that it is quite possible that we could still be bullish in foreign currency, which would mean we would be what, bearish in the DXY, which, judging by this large run from the breaker, we are bearish in the DXY. Now we do have this order block here on the daily that price is traded into a little bit. And we would really have to see it trade through that order block and continue to the downside for downside targets. There's some nice relative equal lows over here, right? We would really have to see all that to be like completely comfortable with, taking the trade in whichever direction we're looking for. But that would be what, bullish DXY, I'm pretty sure. Yeah. So that's what we're looking at right now for foreign currency in the DXY, because other than that, I mean, we had the 4 touches essentially. This is technically on the 4 hour. This is the 3rd touch, I guess you could say, for the breaker. But if we go to the 2 hour, I believe there's more than that. This should be the 4th, I believe. Yeah, because I'm counting this as a touch because we traded past it. High, low, higher, high, lowest down close breaker here, lowest down close candle breaker. Then you've got 1 touch. You've got, we just count all this as 1 touch, right? It's all in the same like general area. Then we come back, trade past all that, and come back into it. That's another touch. So that's just 3. 1, 2, 3. This is 4. You feel me? I was thinking at the time, if we get another trade back into it, that's going to be 5. That's way too many, right? This is 5. And we had another strong run. So this has been the most valid breaker in recent time, because all the other breakers, let's just go back to the most recent breaker that I have in my chart already. This one, we had high, low, high. Let's go ahead and zoom in. Good grief. Can't see that. Let's go ahead and zoom in to this area. High, low, higher, high, right? How many touches do we have? We got 1 touch here. Then we come back up. We don't really have no touches over here. I mean, you could count all this as 1 touch, I guess. It didn't really touch it though. Then we have another touch here. So that's 3, you could say, if we're being generous, right? But none of them only really have 1 touch. And then price basically just says, all right, we'll come back up, So my only thought process is that the fact that price appears hovering around the breaker so much, it's showing an affinity to want to get above it, I think. But that remains to be seen. We will have to wait and see. So just judging by what this looks like currently, a move on Monday may not be as clear. Maybe there will be some movement Sunday that can kind of square away for us what's going on, because we do have that, daily order block here that price is kind of starting to trade into, right? Now, question is, do we have fair value gaps of any sort that maybe price is about to trade into? Like, I don't see any. I just see nice lows that it can attack. I don't see fair value gaps like that. This was a fair value gap, small, and it already traded through it, right? So this is that daily order block right here that I was talking about. It's already traded through 1, 2, 3, 4, 5 candles consecutive though, which forms what you see on that daily, which is why ICT says you can use consecutive, because it just depends on, is it a daily? You know what I'm saying? Is it multiple candles that make up one big order block? Yes. So there you go. But we do have a fair value gap here, but it's after lows, so that we would already have been into some nice bullish trades. So foreign currency, I'm thinking, GU, EU, right? Already shown. We have sell side liquidity, right? That I was starting to put on my charts, because the way the week was going, I was thinking maybe we will have some continued, bearish targets. But now, if we're going to be bearish foreign currency, we would be looking for this high, basically take out this fair value gap first. These highs here as well before we get to the fair value gap. Then you got this high, what I'm saying? So it's like, it's some nice targets, plus you got another fair value gap. some nice targets to the upside, and essentially, as long as we don't come back down and break through this order block zone, I will be bullish GU EU and still short-term bearish DXY. So that's what we have. This is what I had. Said here for last week. If price leaves the DXY sell side imbalances or sell side fair value gaps open, and continues to go after the lows, I would remain short. Now that's what's changed, is that there are no more sell side imbalances open on the DXY, because those sell side imbalances I was talking about were here, and then if we go on the 2 hour, they were, let's see, where were they? They were here and here. So those have been taken out, and you know what I'm saying? So that's why I'm like, yeah, we gotta wait and see, because the order block there on the DXY could send it up, and we could be looking for higher heights. I'm not 100% sold on the idea that the DXY is ready to crash down yet. Now, that recession that they've been talking about, it is looming, right? Like, it is close. So I don't really know, what's going on with the economy in general. EU kind of looking at the same deal. EU did run out some stops to the sell side a little bit more than GU, but let's go ahead and just set that guy up too and see what. Yeah, so here we go. Let's just look at the lowest down close candle here. Basically, EU has touched it, and EU is so much cleaner than GU. Look at that touch there. So a lot of times I would go to EU to give me a clearer picture, of what's going on. Let me just make sure I write what this is. It's a daily order block. Daily bullish OB. EU has basically touched that daily bullish OB and taken off, right? Didn't even go to the midpoint or nothing. We can get rid of this Fibonacci. That was the same kind of trade that we had going on there. The difference in EU is there's not much difference, I guess. The next high would be here. The next high would be here. This is the weekly fair value gap. And then if we were to get above all that and trade and respect that fair value gap, we'd be looking for those next highs, basically. So, I mean, in the EU, it actually looks a little bit more bullish, right? Because you got this fair value gap, which I guess I'll go ahead and put that on my chart as the next potential daily target, right? Because that involves that high right there. Let's go ahead and take that to the right. This is a daily fair value gap though. Daily FVG. So say EU is a little bit more bullish only because we've got that nice huge engulfing candle that's engulfed 1, 2, 3 candles to the upside, whereas GU was more of just a very bullish candle, but it didn't overtake this candle. You know what I'm saying? So technically in technically in GU, you still got this daily fair value gap, right? If we go to the 4 hours a little bit clearer, it's this fair value gap right here that price has to get past. This is a fair value gap with the order block beneath it. So price already starting trading to the little order block. You got to see what happens with the fair value gap. Whereas in EU, it's a little bit more clear. Like, yeah, we trying to take y'all out. Like, it's already taking out higher time frame liquidity, buy side liquidity, and approaching back to that breaker, which I did leave on my EU chart, and ended up going in my direction. So that's another lesson. Just got to stay with your original analysis till you're proven wrong, and once you're proven wrong, you can make adjustments. If you're not proven wrong, then shoot, stay with your analysis. But yeah, that's all I got for EU, GU. Gold is basically similar. It was a similar setup for gold as far as the Fibonacci as well, which is why I've added gold to my array of markets, only because it seems like of all the pairs, I know there's some Bitcoin ICT traders and stuff like that, but gold seems like one of those that kind of does follow in line with GU, EU in its response to the US dollar, right? So if we're looking gold, it's looking kind of bullish. I mean, we're going to probably have a re-entry back into this. Let's go ahead and tabulate that for ourselves. We're going to probably have a re-entry down into that order block, right? Weekly is not as clear. Still majorly bearish on the weekly, honestly. If we're looking at the daily, let's see. Yeah, so we got some highs. These relative equal highs, I would say, would be the next target, but I'm not 100% sure. We won't get, run back into that overall bullish candle there. Let's go ahead and get this off my charts. We can get this order block off the charts because we already used it in that trade. It's currently in a weekly. I believe this is a weekly fair value gap. Not 100% sure. We don't have to worry about it right now though. But yeah, I believe that gold, we probably would at least see some sort of retracement back up in here. This is a nice breaker. High, low, high, lower, low. Not sure what to do with this. I mean, highest up close candle would be here. So I don't know what to make of that. But you might see some sort of like trade that, price comes back into here, and if it doesn't come fully past this fair value gap in this breaker zone, which I can go ahead and just put on my chart, I guess, we would be looking at some bullish trades for the meantime on gold. But gold is more so me watching it pair, as opposed to this is 3 consecutive, so I'm gonna do these. This is a 4-hour breaker, 4H bullish breaker. Yeah. So that's what I mainly trade GU. EU is next, then gold would be next, and gold would be lower lot size until I really feel like it's worth something for me. Then the next thing would be GJ, which GJ I like for AM setups, and God willing, I'll be able to start taking advantage of some of them. Daily bias, don't know, because right now though, I know that it's taking out this higher time frame liquidity. So maybe at least we can have a run back against some of this, like similar to how we had if we zoom in, we had this. We had run on liquidity here, run out these stops, even this too, and then we had a nice long slide which involved a breaker, clear breaker, trade back into the breaker, you know what I'm saying, and then just nice easy downside targets for this set of liquidity and over here as well. So that's what I would be hoping for as well, because look what have we already had. See, now this is why I like to pay attention. We've had a run on liquidity, right? We ran out all this. Now what do we have? Easy breaker, high, low, higher, high. So when GJ runs out liquidity, right? That to me is like the easiest. That's when it really presents itself. I mean, that's all pairs, right? It's not just GJ. But let's look at I want to look at what I have on the weekly. I had it on the daily, I thought. Okay, yeah, high, low, higher, high. Either that, we could do high, low, higher, high, which would be this as the breaker. I wonder which one do I like the most. I like the bigger one. But let's see which one is the best one to use. Yeah, I would say use the bigger one, right? High, low, higher, high overall. Use this fair value gaps right across from it, because price has already gone past this one, right? But if we get respect of this zone, then we would know for sure that price isn't about to it's not about to it's gonna sustain the movement. So I'll go with the bigger one. So this would be yeah. On the daily, it's a little bit different because it hasn't all the way traded past. If I use the bodies, it has, but this is a long wick, so I like to lose the wicks. Go back to the 4-hour. Let me use the body of this 4-hour candle because it looks like it's the clearest. Some fair value gaps across from it. So with GJ, we would have to see it not trade past that breaker area. Bearish. Oh no, what's the hours? 4-hour. For me to really be like, wanting to get in on a trade here. And then obviously we have these nice lows here. Low, low, that we could target. So yeah, I could be looking at GJ this week as well, the rest of this month, because we've ran out liquidity. On the alternative side for GJ, since we have these, we do have some fair value gaps open here. Like if price does not trade past this breaker zone and doesn't trade past this fair value gap, these fair value gaps, then we're still bullish, right? But I'm gonna err on the side of bearish. Because the bearish breaker has formed. So that's where I'm at with all my pairs. I might have Bitcoin on here, but I don't trade it. Oh no, I took it off. Yeah. So that's where we're at. So I like to do this exercise every week just so I can know my stuff turned off in the for when the market opens, I know what now for time. I'm about to record some video, do some stuff before everybody wake up. So I appreciate y'all on my end screen. Wonderful day. Here, this is facts. I enter right here. It's a demo, but I'm just showing you my executions. I enter right here after the impulse. We already talked about why I entered. I entered because of a order block on the higher time frame, 15-minute, and fair value gap, and I waited for a lower high, got in on the impulse. Boom. I waited until price gave me what I wanted price-wise, till I got to my goal. You don't have to wait all day, all right? Me personally, with a 10 lot size, trading the FTMO $100,000 account, if I can get $2,000 to $3,000 in a day, I am so happy. If I can get $1,000 profit in a day, and that's all it gives me, I'm fine with that. Okay, it's all about stacking profits up day by day, week by week, month by month, year by year. It ain't about big profits. Now, I left the trading because my stops are the profit, and I'm in the same direction as my higher time frame bias. I have the leverage. Okay, I will leave my trade in until price gets to that next level of liquidity, which at the time, what I had been targeting, let's see, what was I, if I can remember, what I had been targeting, to be honest with you, I was targeting this lower sell side liquidity, to be honest with you. But I like to have a modest target in case, that doesn't happen. So I think, where was I? I was, okay, here is what. All right, I did have a question that I wanted to address. Baxter, thoughts on GA? I can give you my thoughts on GA real quick. Now, I ain't gonna lie to you. I don't trade GA as much anymore, so My thoughts may not be as valid to you, but we can go over it if you want to see it. Now, would y'all tell me if I do lives, when is the best time for me to do a live for y'all? Like, is 7 a.m. way too early? Because I'm doing it that because people, if at like a later time, I gotta let's see, should be right now. All right, let's just go GN. Gotta look. Um, let's see. No, this is the GA you're talking about, I hope. But if we looking at it over the past few weeks, you got a nice little breaker here, and then a nice little fair value gap. It looks like price is traded up into that zone just right off the bat. So I'm not 100% sure because I know GA likes the trend. Like, you know, that whole trend I used to take advantage of back in 2019. This trend, basically, this was a breaker and price traded back down. This is another breaker here. If we're looking at it, high, low, higher high, fair value gap across from it, which validates it, lowest down closed candle. You would be looking at price. Looks like for the past few weeks has struggled around this area. If I were a betting man, I would say we may be getting some more bearish targets with GA. But the fact that it's already ran out liquidity on the downside, right? Like the fact that we've already had this strong run, I'm trying to look for the liquidity to the left side. Like you ran out all this liquidity here. 1, 2, almost this guy. So I would, though I just said that this is a breaker and all that, we've already been up here. You know what I'm saying? We've already utilized that breaker. If we look back here, we've already used this breaker, right? We had the breaker high, low, higher, high, right? We already touched it and came down, and then that's what resulted of this movement. So what I would say is now you got to look for the opposite side, breaker wise. Low, high, lower, low. That's also a breaker. Change in market structure, which is when a breaker is traded past with the fair value gap. Now we've got this, right? And price doesn't even come back into it. So I would say that on the short term, GA, we may see price trade back into this zone, right? Maybe even just above it, right? You would want to see, okay, where are the order blocks? This is essentially in line with the most recent order block. This 3 consecutive non-closed candles, which I bet you on a weekly, would be some sort of order block. Boom. So yeah, there you go. There's your order block. There's your low, high, lower, low. That's the breaker. There's a fair value gap that validates it. I would say that we might see price either trade back into this order block or into this zone, and then we would have to see, you know, what is price going to do from there because it's already ran out sell side liquidity. You're probably going to see GA come down here, touch this breaker zone. Let's just go ahead and put it on the chart so y'all can see it. Highest up close candle. We just used the wicks. This is on the weekly. And this is one of the reasons why I like GA, because GA is similar to GJ. When a touch fair value gap as well, which I would usually like circle or something just to show myself, right? But if we go to the daily, we can show where that is. That's basically this area, right? Across from breakers, across from the order blocks, right? Price trades back down into it. So I would say bearish the first part of the week potentially, but then we got to see what happens around this area. So the fact that I just broke that down, like, I actually pay attention to GA. I didn't even want to be looking at GA before, but that's the thing. It's like, how many? You don't want to have too many pairs, right? I'm already really nice. GA, setups in the future, so we'll see. All right, is there anything else that y'all want me to break down before I go? Because I already did a whole 40 minutes on EU, GU, and gold, GJ. I just got the request for GA, and that's the only reason why I did that. Is there anything else that y'all want me to break down before I'm out of here? And can y'all even see my screen? Because here it's showing that you can see it, but on my thing here it's showing that you can't see it. So I don't know. Hopefully it's playing, but I see my face. I see my face. I see my face. End it up. If there's